What's going on, everyone? My name is Jeff, and in this video, this is actually a part 3 of 2 videos I made. One going back about a year ago to November 20th, 2018, and another one I made March 1st of 2019. So I've been going back through some of my old inventory, some of my older catalogs. I know this was a video that a lot of people liked, and fortunately enough, I still have the Yahoo Finance portfolio set up, and those shares have been actively trading all along. Again, this is a video about which stock can run to 100% first, NIO or Tesla, okay? Now I'm going to go through part 1 and part 2 of those videos, give you kind of a setup. I'm sure some of you watching this probably do remember when I made these videos. So I'm going to give you the setup. I'm going to tell you exactly how I got to where I am. And then at the end of this video, I'm going to show you where these 2 stocks are currently trading at from a year ago. Again, guys, keep in mind, this is just a fun video. This is not me being a Tesla fanboy. This is not me being a NIO fanboy. This is just me making a fun type of video against 2 big competitors in the electric vehicle space. And that's really all there is to it. So we're going to get into that. This is kind of an old graphic, but it will kind of help explain some of the fluctuations you have seen in NIO and Tesla stock over the past few years. The big point I want everyone to draw from this is that Tesla just had their best earnings report they've ever reported, and they're becoming far more fundamentally strong. As a matter of fact, most analysts have turned fully bullish on Tesla, giving them much bigger price targets. They had the big beat on EPS. So the whole idea here, I think the thing you're going to see by the end of this video is that fundamentals, good balance sheets, and good cash flow is always going to beat hype. Even a low PPS like NIO had, where it's been trading at $1 and $2 a share, you would think, well, it is a no-brainer. Obviously, NIO is going to run to 100% before Tesla. That's not always the case. Good stocks get bought up and bad stocks get sold off even more. That's really the point and the thing I want to focus on in this video. Use this video as somewhat of a tool. Like I said, I have over a year of data on going into this idea. The stock market rewards good balance sheets, and they punish companies that can't make money. So we're going to jump into that in just a moment. But first, guys, please drop a thumbs up on this video. I appreciate all the support, and make sure to subscribe to the channel if you have not done so already. Alright, the first video, guys, Tesla versus NIO race to 100%. I published that video on November 20th, 2018, and the whole gist of the video, guys, was to take a position randomly in Tesla and in NIO and see which company would return 100% share value first. Now, keep in mind, I did say that we will be cost averaging as we go along. I'm sure I could have bought Tesla on a lot better day. I'm sure I could have bought NIO on a lot better day. Like I said, that was not the idea of the video. I was just kind of randomly picking a day, buying a share of each company. And my cost basis on Tesla was $347.49. And as you can see, my cost basis on NIO was $7.67. This is a Yahoo Finance portfolio. I'm at a full understanding that this is not my real money. I got a lot of hateful comments last time. If you want to know how I trade my real money, head over to Trade Alerts Pro, and you can see how I trade my real money every single day. I'm not really going to disclose a lot of that here on YouTube. That is more of my premium content. But anyways, this is really where the first video kind of ended. Right here, just me buying 1 share of Tesla at $347, buying a share of NIO at $7.67. At that time, I think this storyline was far more bullish for NIO, okay, because it was shortly after their IPO, and this stock was returning. You're going to be surprised at the next graphic, the next video that I show you, because where we stand today, Tesla is just by far the dominant company, but NIO actually was kicking its butt when you go to March 1st. All right, video number 2. Tesla versus NIO race to 100% part 2. This was published on March 1st, 2019. As you can see right off the bat, NIO was up over $10 a share. You can see right over here at the total gain up 30%. And Tesla was down $52 a share. And as most of you probably do remember, it got really bad for Tesla over the summer, trading itself down into the 170s and 180s. And at that time, I do have several videos where I've told everybody if you were holding puts or you're going short on Tesla, please move out of those trades at the 170 to 180 level, because just as soon as any coverage got bullish on Tesla, this thing is going to run like crazy, and it did exactly that. Again, guys, nobody knows the answer to those questions. My one thing is Tesla lost over 60% of its value, and this was still a very good company that was having some bad earnings and some kind of poor delivery numbers. Meanwhile, NIO running to well over $10 a share just kind of seemed unjustified when you really looked at earnings. Okay, so it was getting rewarded for poor earnings reports and poor fundamentals, and I feel like Tesla was getting overly beat up and traded down to levels that just were not fundamentally accurate. So at the end of this video, I said that I was going to buy one share of both companies again. Okay, I was going to buy one more share of Tesla and one more share of NIO. I did that about 2 to 3 weeks after I published this video. Said I wanted to wait till after NIO's earnings report. My cost basis is much different now. Let's go over to Yahoo Finance, open up my portfolio, and I will show you where these two are at. So I just want you to take a quick mental photograph or pause the video and come back. NIO is up 30% here. Tesla's down 15%. All right, so here's where we are at as of December 6, 2019. So we're 1 year and a couple of days past the very first video, and we currently own 2 shares of Tesla, 2 shares of NIO. As you can see over here to the left, Tesla's trading at $335.89, and NIO is down $2.26. NIO is really getting slaughtered, has lost so much value. Again, that was an IPO company, and it hit the market at a time when IPO companies are really kind of flooding the market. There's so many different IPO companies. Our average cost on Tesla comes out to $299.65. Our average share price on NIO, $6.21. And I know there's a lot of people thinking NIO was a bargain at $6. Our overall market value, that really does not matter. Daily gain does not really matter, but I want to go down here to the end. This race to 100% is going to take a lot longer than I originally thought. If you want to go off algorithms, I would say NIO probably does have a better chance of running itself to $4.50 here from $2.26. However, from our current cost basis, it's going to have to gain over 63% of its value, while Tesla is 12.09% in the green. Tesla would have been the far better investment going back 1 year ago and then buying more in March. So the race to 100% is still going. I can think of a lot of other companies that have surpassed 100% during that period of time. Auto manufacturing is a very difficult place to make money in the stock market. I've been saying that for 5 or 6 years now. Tesla's still probably the best place to put your money, maybe other than Ferrari, ticker symbol RACE. That's actually my favorite auto manufacturer in the stock market right now. And maybe just for fun, I'll throw a couple of different companies into the mix here. What if I picked up a share of GM, picked up a share of Ford, and picked up a share of Ferrari? If there's any companies you guys would like to see me add to this list, go ahead and tell me. I'm going to go ahead and buy another share of Tesla and NIO probably Monday or Tuesday of this week, just to get in line a little better with the cost basis. If you guys can think of any other companies you would like to be in on this 100% run, let me know and I will try to add them for the next video. Guys, real quick, let's go over some of the fundamentals. Again, I know this is not the sexiest part about investing, is analyzing numbers and analyzing statistics, but the better you get at this, the stronger your portfolios are gonna look. So let's go over here to Tesla. Let's go look at a couple of their fundamentals. So right here in profit margin and operating margin, again, they're not profitable yet, but they're getting very, very close. Their operating margin is slightly profitable, while the return on assets is moving into the profit area, and the return on equity is only down about 10%. Now, if you compare these numbers to a year or two ago, these numbers are a lot better. And where I've seen the most work done is here on the balance sheet, okay? $5.34 billion of total cash compared to $14.64 billion of total debt. Those are very healthy numbers, especially for an auto manufacturer. And this free cash flow, operating cash flow at $2.21 billion, and a levered free cash flow of $993.67 million. Now, at one point in time, it was reported that Tesla was going to completely run out of cash. and of course they cleaned it up and improved things a lot. This is why you've seen such a huge move in the share price going back to the summertime. And then get your barf bag ready, because this is why NIO is having so much trouble. NIO is negative 239% in the profit margin, and obviously they don't have an operating margin. They're down 53% return on assets, and the big one, down 611% return on equity. Guys, this is absolutely terrible. There is no operating cash flow, there is no levered free cash flow, and they have their total debt to equity ratio is a whopping 2,354. So from a fundamental standpoint, NIO is absolutely terrible. They have so many things to improve in. Like I said, the true growth company and a new IPO company, getting support from Wall Street, but now not getting support. Okay, so it's went all the way from $10, seen its way traded down to the $1 range, and now is returned closely to $2 on some bullish news. But they have to bring it on earnings. They got to show better numbers, and this is the reason why Tesla is kicking their butt. Okay, so that is all I got for the video, guys. Make sure to go down to the comment section. Tell me if there's some other companies you would like to see me add to this list. If you would like some other auto manufacturers to get in on this race, or are you just completely satisfied seeing Tesla and NIO race to 100%? NIO has a long ways to catch up. Thank you as always for watching the video, and have a great day.